And joining us now to talk more on today's monetary policy meeting decision is Professor Andre Roux, an economist at Stellenbosch Business School. Andre, thank you so much for joining us here on the late edition. Let's start here. What's your immediate reaction to the latest increase in the repo rate?
Thank you. Well, first of all, good evening, everybody, and your viewers. I am speaking from Soho in London. First reaction is somewhat of a surprise. On balance, I was of the opinion that a 25 basis point increase would have been sufficient at this stage, and that a 50 basis point increase would only have kicked in if the Reserve Bank was really concerned about the effect on inflation of the let's call it the Russian arms deal and how that has affected the exchange rate of the rand. But on balance, I was looking at 25 basis points because as much as we need to bring inflation down, we don't want to strangle the economy into absolute submission.
And we've been seeing these increases from October 2021. What would you say? I know you speak of the issue with Russia, but we have been really on an upward trajectory here when it comes to the repo rate increase. What would you say is the main contributing factor to where we find ourselves now?
Well, I think if we just consider the situation without the Russian story, an increase was on the cards. I mean, we all know that the inflation target range is between 3 and 6%, and we're still somewhat above that. We know that elsewhere in the world, interest rates are still on the rise, and we can't afford to lower interest rates when others are raising theirs. That will lead to an even further weakening of the rand. We also know that a number of other inflationary pressures are still alive and well in our economy. These range from rising food prices, obviously, rising oil prices, and in addition, a recent announcement that the minimum wages are set to increase by inflation plus a bit more, as well as the still growing uncertainty about civil servant wage increases and the fact that government spending or the government deficit might be bigger than initially anticipated. So bearing in mind the Reserve Bank's very clear constitutional mandate, which states categorically that the main aim of the bank is to protect the value of the currency, we knew that an increase was on the cards. However, as I was saying a bit earlier, whether we needed a increase is debatable. The bit of good news is, reading between the lines, the governor seemed to be hinting at the possibility that this could be the last one. They used words such as we're reaching a point of saturation. And as I say, that might be an indication that this is the last one, and maybe he felt, let's give us a big bang, get it over with, and from here onwards leveling off, and sometime into next year, perhaps a gentle decline in interest rates.
But this is also certainly bad news for many South Africans, especially those who own homes and those who have debt. When it comes to homeowners, what does this essentially mean? I'm sure you saw my colleague there just tabling, the increases from 2021 to now and how much you would be paying for a home loan with R1 million.
Yes, it's terrible. However, as always, there are trade-offs. Let's think about a different kind of stakeholder in the economy, the very poor members of society, with food prices rising by 14 or more %, which means that for poorer members of society, their inflation rate is actually more than 6.8. They're waiting for food is much higher than those who are more fortunate. So, as I say, it's a trade-off. So by raising interest rates now, yes, we cause misery, but in the longer term, one would hope that the increase in rates would ultimately result in price increases slowing down. So it's kind of playing the long game. There's no short-term fix to these things. I should also add, what it's worth, that when we look at the real interest rate, that is the prime rate minus the inflation rate, and we look back over the last number of decades, where we're at now is not extraordinarily high. In real terms, interest rates in this country have in the past been substantially higher. Two rights don't make a wrong, or two wrongs don't make a right. But for what it's worth, we have seen much tougher interest rate or monetary policy stances.
And Andre, you are basically saying to South Africans they just need to hold on a little bit longer. But when you see the trends, especially towards those who are owning homes, what trends are you seeing here? Are you seeing more South Africans leaning towards keeping their homes, or are you seeing them, letting go because they can't cope with the inflation rate and they also can't cope with the repo rates?
Yeah, look, I'm not a housing economist, but do bear in mind that you can't cope with the interest rate, and then you said can't cope with the inflation rate. Bear in mind, you subtract one from the other, it is somewhat less imposing, and in a weird way, because of a high inflation rate, it might be somewhat to their benefit. But having said that, obviously it's painful, and the real story is, if and as homeowners try to cling onto their houses, their properties, it does mean they have to cut back on other forms of spending, other forms of durable spending, other forms of non-durable, other forms of services. So there will be a negative impact on the overall economy one way or another. On an economy which is already, as we know, showing very tepid growth, with high levels of unemployment, with large gaps in equality. So it really is one of those unfortunate states of affair. Do we want to buy a high economic growth by artificially lowering interest rates and creating a bit of growth which will not be sustainable? If you do that, then 2 years down the road, inflation jumps up to 15%, and then the interest rate increase will be draconian. Or do we rather want to attack the problem now, get it over with, get the pain over with, and then kind of hope that should do the job?
Andre, you're also saying that we should read between the lines, and this could be the last increase we are seeing, or major increase we are seeing. When will how soon can South Africans catch a break from these repo rates? Are you able to tell us, when things may be able to at least stabilize?
Yeah, I wish I could. Given our current knowledge and evidence, but as we know, things change so rapidly. 2 or 3 weeks ago, I think the majority of people were saying 25 basis points, and then along came this unanticipated rumors regarding the Russian arms deal. So, but barring those kind of shocks, I suspect we'll only start seeing a relaxation of interest rates sometime into early next year, not before then. That's not to say that rates will carry on increasing from now. I think the best case scenario would be staying at more or less the current level for the rest of the year into early next year. And then as we see inflationary pressure slowly subsiding, especially internationally, then we might start seeing some gentle relaxation of interest rates. But for the rest of the year, at best, the status quo, maybe one more increase, depending on what emerges in the next few months. But certainly I wouldn't see a drop coming before sometime early next year.
All right, then. Thank you very much indeed. That is Professor Andre Roux there, just giving us a bit of insight in terms of that repo rate in which we saw earlier being announced today.